Welcome to this podcast covering the latest developments in the U.S. stock market. Before we begin, it is important to note that the information presented here is for informational and educational purposes only and does not constitute investment advice. Every investor should conduct their own research and make decisions based on their individual financial situation, risk tolerance, and future expectations. Pinterest recently reported revenue growth of 14%, showing continued expansion of its advertising business. However, net income dropped significantly by 85%. This decline was mainly driven by American tax changes and heavy investments in artificial intelligence, which are expected to impact profitability in the short term. The company also indicated that retail advertisers were negatively affected by inflation and tariffs, which caused 2026 guidance to decline slightly. Despite these short-term pressures, analysts still maintain a buy rating. From a valuation perspective, the P/E ratio remains relatively low, and the stock is currently at a strong technical support level, which suggests stability and potential upside if growth investments deliver results over time. Palo Alto Networks reported strong financial performance, with revenue increasing by 15%, earnings per share rising by 27%, and net income growing by 62%. The main concern came from future guidance, where earnings per share were lower than expected. Additionally, the company performed dilution to support acquisitions, including CyberArk in Chronosphere, which is part of its long-term cybersecurity expansion strategy. The company also introduced a platformization model offering 12 months of free services to clients who signed 5-year contracts. This approach is expected to reduce billings in the first year, but strengthen long-term recurring revenue in customer retention. From a technical standpoint, the stock is currently at a key support level of 152. If this level breaks, the next support zone is around 131. Overall, the fundamentals remain very strong, supported by growing demand for cybersecurity driven by artificial intelligence and digital transformation. In cybersecurity, companies like CrowdStrike and Zscaler continue to present strong opportunities. These companies play a critical role in protecting AI infrastructure, cloud environments, and enterprise systems. As AI adoption accelerates, cybersecurity becomes increasingly essential, positioning these companies in a structurally growing sector. In software, Salesforce remains a strong company due to its leadership in enterprise cloud software and its integration of artificial intelligence into its platform. Meanwhile, Netflix recently broke a technical support level and is currently trending towards support zones around 69 or 60. This technical movement reflects market volatility, even as the company continues to dominate the global streaming industry and invests heavily in content and platform expansion. In hardware and infrastructure, companies such as Vertiv and GE Vernova are well positioned to benefit from growing demand for AI infrastructure, including power systems and cooling solutions for data centers. Similarly, Western Digital and Wolfspeed are benefiting from massive investments in data centers, storage, and semiconductor technologies required to support AI workloads. The U.S. market continues to experience volatility, driven by shifts in investor sentiment between fear and optimism. At times, markets react to concerns about a potential AI bubble, while at other times, capital rotates between software and hardware sectors. This rotation reflects the ongoing process of pricing future growth expectations and technological transformation. A balanced allocation strategy is often used to manage volatility and risk. A commonly referenced structure includes allocating 50% to ETFs for diversification, 30% to large-cap companies for stability, and 20% to small-cap companies for higher growth potential. This approach helps balance stability and growth while reducing exposure to excessive volatility. The U.S. market remains heavily influenced by artificial intelligence, cybersecurity demand, infrastructure expansion, and macroeconomic conditions such as inflation, interest rates, and global trade. Companies that are positioned within these structural growth trends continue to attract investor attention due to their long-term potential.
Subscribe to the channel to receive all the latest updates and analysis on the U.S. stock market and stay informed about the most important opportunities and risks.